BRVM, starting with the markets rather, the BRVM 10 index closed trading on Thursday at 212.68, down marginal by 0.04%. But meanwhile, the all-share index, which is also the BRVM composite, remained unchanged at 192.28 points. Now, total value traded dropped to 489.53 million CFA francs. But moving on to Ghana, the GSC Composite Index closed trading on Thursday at 1,772.59 points, up by 0.12%, keeping its year-to-date change at 47.75%. On the other hand, the GSC Financial Stock Index closed up by 0.13% to close at 1,583.29 points. The year-to-date change for that index stands at 52.26%. And in Nigeria, the NSE All-Share Index declined by 1.40% yesterday and closed at 33,886.53 points. Now, this represents a year-to-date performance of 17.12%. Now, the total value traded decreased by 37.35% to 5.86 billion, and the total volume traded decreased 53.69% to 355.02 million units. Well, joining me to look at the markets is Yomi Balogun, fixed income analyst at Stanbic IBTC Global Markets. Thank you for joining us, Yomi. Now, the CBN sold about $500 million this week. Now, that sounds like a lot. Does this imply a shortage of supply from oil majors and foreign investors?
Yes, actually, there's been a shortage of supply of dollar liquidity into the market, and we've seen the CBN up the amounts on offer at the WDAS auctions. There are 2 auctions every week, and for the past 2-3 weeks, they have upped the amount on offer. But incidentally, at the 2 auctions that held this week, even though they offered $300 million at each auction, we saw that what was sold was short by about 100 million out of the 600 million on offer. This would tend to suggest that even though we do have demand, that the demand may not be as much as is anticipated by the CBN.
All right, now, do you have a sense of the participation of foreign investors, at last Wednesday's bond auction, or would you say it was more or less than what we usually see, and why?
No, the amounts that were, the subscription was not as high as it used to be at these auctions. Total subscription for the three tenors or 3 maturities on offer clocked maybe about less than 150 billion. And so it's really is not in the kind of league we used to see in the past.
All right, now, do you think foreign investors, will continue to consider yields in Nigeria's bonds? Do you think we'll still consider it attractive, considering that they've dropped significantly since last year?
Yes, it did drop, but right now it's on the uptick again. We've seen the yields going back up, and it's going to provide quite an attractive re-entry level, because if you look at the exchange rate too, exchange rate has ticked up recently, and that's the two parameters would provide an attractive re-entry level for foreign investors.
Oh, well, let's get your thoughts on how the bond market reacted to the March inflation number. To what extent would you say those numbers were priced in?
I think more or less the reaction in the bond market was more around liquidity, more around what was on offer than the inflation numbers, because inflation numbers came down to 8.6%, but the yields in the auctions went up.
Right, now, do you anticipate further declines in yields given the positive outlook for inflation?
No, as long as we have a situation where there's not too much interest in the bonds itself, you should see yields begin to tick up. Now, yields will probably go down when you have the offshore investors begin to re-enter the market and to buy the bonds. Then we would see a gradual decline in yields.
All right, now, speaking with you earlier, you did mention that, the market saw the CBN intervene yesterday, when it comes to rates. Can you give us an insight more on what happened there?
Okay, as at yesterday, on the FX market, we had a situation where the exchange rate had begun to tick up. It approached 159 levels. And when it did that, the CBN came in and intervened in the market by selling to selected banks, and that brought the rate down to about 158.75 at the close of business yesterday.
All right then. Okay, well, how do you see that affecting, the market for the rest of the quarter?
Well, you see, what it shows is that the CBN has sent a strong signal that it would intervene in the market when it believes that the market is going outside the set limits it has. And so that provides support for the market, and it also provides some confidence in the market that there will be liquidity to meet demand if the demand begins to get out of hand.
All right, now how would you assess, the participation of most Nigerian investors at the fixed income market? Now, do you think more still needs to be done to get people involved?
Yes, more still needs to be done, especially on the retail side. You see, the market right now is populated by the large pension funds, and on the retail side of the market, we don't see too much interest. One, because not too much education has gone out on the FGM bonds, its attractiveness, its benefits, and so on. So you see most of the demand that we have, or most of the activity in the bond market, is limited to pension funds, insurance companies, and the huge funds that you have available in the country. But the retail investor has not really participated much hitherto.
All right, now we have a bit on an inverted, yield curve with T-bill yields higher than what you can get from, 3 to 5 year bonds. Now, when do you expect the yield curve to flatten or normalize, and what will be the driver?
Well, as long as we have the CBN mopping up liquidity, okay, by issuing OMO bills, those are special bills that are issued when liquidity is thought to be too much in the financial system. The CBN issues OMO bills and uses it to mop up liquidity. Now, these bills come at a premium to normal treasury bills, and so you see the yields at the short end have gone up substantially. Now, as long as the CBN continues its activities, we're likely to see the same inverted yield curve for some time to come.